the elites? Why'd you send me demons when I asked for God's son? You're the most liberal bunch I've ever met, and you can bet before it's through, I'll make a conspiracy theorist out of you.
All right.
All right, guys, welcome back.
So, okay.
Liberty Tree.
Liberty
Lizzie?
Tree, yes.
Lizzie, yo.
So this is getting a little spazzy because like we've been all over the place, but you know what? It's our channel and we have a lot of different interests, so like fuck it. So we've been watching Joe Brown pretty much since like COVID.
Joe Brown is a finance channel. He does a lot of like investing stuff, market analysis.
Mm-hmm.
Also, he looks at like
The Fed.
the Fed. Oh, he does big time. Yeah,
Fed.
Fed stuff.
So great channel. Especially if you're like new to finance, like go back and watch his old shit and like all the way up to
He's
recent
good at
stuff.
literally like breaking it down.
Into like layman's terms. Fantastic. We've watched Nick a little bit, Reventure Consulting, especially when he used to do his old analysis. So there's a new gentleman that's been on like TikTok and Instagram, and he's been trending. His name's Zach. And you know, like when I played him the other day, you're like, I like this guy.
Yeah, kind of has like a mustache.
Yeah.
Interesting guy.
So he, I would say like recently started a YouTube channel. I don't know if it's like super recent, but it's like more recent than the other folks that we've been watching. And I used to see like his shorts and stuff. And he is talking about how the Fed's getting ready to print, which I agree. The Fed is getting ready to print. But from everything I've learned, he's suspecting like hold assets, because he's like, it's about to go hyperinflationary. And while I would agree with that, I also disagree. If I learned one thing from watching Nick's channel and Joe Brown's is like, Nick was calling, it's going to crash. And to be honest, I still agree with him. But I think the big lesson there is not yet. And what I learned in watching a lot of this, and I think we both learned, is this shit moves so fucking slow that when they print money, it takes like a year, sometimes 2 years, depending on the volume, at which the like rate hikes and stuff, like what they're doing to adjust it impacts the speed at which it then finally hits like the real economy. Like the fake economy with the stock market and stuff, honestly, that's so decoupled from reality at this point, like I'm not even talking about that. But the real economy. And so I think it's interesting because even if the Fed prints, which personally, from what I've read, it sounds like they're going to print to back the government, not necessarily the banks.
What does that mean?
What does what mean?
Printing to back the government.
So like in 2008, we had a liquidity crisis and Lehman Brothers failed and they needed to bail out the banks because they had risky assets on their balance sheet. So the Fed, who just creates money out of thin air, they call it money printing, creates these treasury bills. Hopefully I'm not botching this too bad. And then they would exchange them with the bank for...
So the Fed buys the treasury bills from the treasury?
No, the treasury is from the treasury for the government. But there's also bonds, which are from the banks, which would be like mortgage-backed securities and commercial... Actually, they don't buy commercial. Mortgage-backed securities. And then like from companies, it would be like stocks.
So they print money and they purchase these government bonds.
And they say, okay, at another
Government
later
treasuries.
day, I'm going to give it back to you and you're going to repay me.
Sure.
And typically when they do it,
Usually
they do
there's
it...
a rate on the bond.
There's a
right?
rate on the bonds.
Okay.
And so that's called the federal funds rate. So like during COVID, the federal funds rate basically went to zero. And because of that, the banks were all getting free money. And so because of that, they can then turn around and they want a margin on their free money. Of course, the banks always want to make money. So they would lend it out to like 3%. They could even go to 2%. Fuck, they could have went to 1% because technically they were getting free money. It wasn't even their money.
Sure.
So anyways, then we got in a tightening cycle and yada yada. Well, when they tightened, I think they tightened, I want to say it was like 22, 21 when they started to raise rates. But the thing is, like, the effects didn't get felt until like 23, 24. Not really. I mean, some of us, like, we own a business and like I think as a small business we could feel it more, like the pulse is like a lot more prominent. We could notice it a lot easier. But if you're a W-2 worker or you just aren't in certain sectors, you're not going to feel it until like much later delay. Like it has to work through the system almost like a cog wheel. Like it has to like work like
Sure.
all the way through. And so what I realized is it takes so long. So even if they are going to start printing, that delay will likely take a year to probably a year and a half, depending on what they're doing. Again, maybe it'll be instantaneously 6 months, but most likely it's going to take a year to a year and a half.
Okay, so you're saying that the Fed, most likely the governors, will all vote to print.
It's inevitable at some point.
It seems like maybe 3 or 4 do, and 3 or 4 don't. Say don't.
So they're hodling it, yeah.
Okay, so they're all going to vote to do it.
Yeah.
But the point of it is to create an immense amount of cash to buy bonds and T-bills from the government
this time. So last time
the
bailout.
What will the government do with all this surplus cash, and why do you think they?
Well, it's going to go into our debt because they're borrowing money from the Fed.
So it's to pay for the interest rate on our debt.
Yeah.
Okay.
So Joe Brown's talking about this. So we have a sovereign debt crisis where we're borrowing more money than we're even taking in revenue.
I think even our most. It's like if we had a credit card bill, our minimum payment,
we can't afford.
We can't even afford the.
We're taking out debt to pay our minimum interest on our credit card. It's essentially what it is. It's so good. So, but that doesn't necessarily mean it's even going when you take out loans to a bank and they create mortgages or they create business loans, you could see how that would be inflationary and it would trickle into the economy and make things kind of heat up, right? When you do it to the government, not to say that it won't, government contracts exist, but they're in very niche specific sectors. It's not as broad as if you're going to the bank. And because it's not as broad, if you think about it, if you're infusing money into 1 or 2 sectors, those ones, for them to get inflationary into everything else, it's going to take that cogwheel is even longer of a chain.
Yeah, absolutely.
So if it took 1 or 2 years for that inflation to be felt, and you're now doing it just to the government, it will be inflationary, yes, of course, but it's going to take even longer to be felt because it's going to just specific sectors. Again, that's my theory. I don't know for certain. Nobody can really know. Honestly, I don't even think the Fed fucking knows. I think the whole thing is like a cog. I think they're turning knobs, and I think what they're doing is when they finally get a CBDC, I think they want to understand money and psychology so well that they can turn knobs and do whatever they want to do. But every time they do it, they end up in a lawsuit, and then they can't use that tool again. So then they have to redo it, and so they're always guessing. It's what it seems like.
Also, creating a window for that.
Yeah.
And also, it's so lagged that it's decisions they're making now could affect things in the future,
2 years,
but then they're
didn't.
altering things in the future, and it's so lagged that they probably don't
it's
really understand.
Their 2 things are merging, and it's what the fuck was that?
It's like if you're going down on an ice sheet and you turn, but you're still going straight, and then eventually you catch some rocks, and then it turns, and you're but you had the wheel
and now
turn
you're trying to go back the other way, and now you're spinning, and you're like, what the fuck's going on? So my point to this was, I think because of the lag, typically if they're going to print money, you don't print money if the economy is still doing well.
Right.
You do print money to inject money to, it's kind of like the revive machine. They're trying to revive a bad economy. So if they're doing that to stimulate the economy, I guess in theory they could be trying to get ahead of it and doing it before it's too bad. But if it's such a lag, they could be overestimating or underestimating the lag. Again, nobody can know. They're kind of making a blindfold guess here because they can't know what it's going to do with all certainty.
Sure.
It's like they can have all these models and this and that, but also you're trying to map psychology of humans. Well, also, these models are written by people at Harvard and Yale. How well do they understand the psychology of the modern everyday peasant down here? They don't understand, so how well are their models going to be reflective?
It's very macro.
Yeah. So again, the macro also could, one rock in the thing and the macro thing's all fucked up. So okay. My point is, if they're going to print, the lag could be so bad that they're printing because the economy's bad that before we go hyperinflationary or it goes up, I think we're going to have a crash.
Okay.
Now, again, when will that happen?
Or at least a down cycle.
Or a down cycle, because also not only that, but if you look at all the conspiracies of the Fed and where it came from and why it was designed, literally it's a boom bust cycle that they worsen and try to control so that way they can buy the assets cheap and sell them high. So while everybody's being told by, sorry, Zach, I think people are like, Fed's going to print, oh my God, everybody should rush into assets. You're going to buy gold, you're going to buy houses, you're going to buy land, you're going to buy this, you're going to buy that. The wealthy, if you actually look at a lot of stocks right now, again, it's been decoupled from the real economy, but if you look at stocks right now, a lot of insiders are mass selling. why would that be if it's going to go hyperinflationary? Why would they sell assets if it's going to go hyperinflationary? Oh, maybe it's because it's actually going to come down first and then go higher.
Like a rug pull.
And it's like, oh, well, you're going to say that's tomorrow. No, actually, I don't think it's tomorrow. I think that this is over the course of probably 2-3 years. It will slowly stair step down. Even if you look at the Great Depression. The Great Depression came down over like 3 years. Then it went up a little. And then it went down again. Like, when you look at it big picture, you're like, fuck, that thing went way down. And it's like, no. If you look on it on the day-to-day, the month-to-month, those people were feeling it go down, yes, but it doesn't look the way it looks when you step back and look at the whole thing. So try to put yourself zoomed in version of it. It looks similar to what we're in, or it might look similar to what we're in. I mean, I'm not a fortune teller, but I think it's interesting that like people are like, oh, they're gonna do this, and I'm like, good timing because we're all in. You have everybody piling in while they're unloading their bags and selling off, getting ready for this thing to bottom. They all get obliterated. All the peasants, us. We get obliterated, and now they come buy it back up with all their top of things.
You buy low, you sell high.
That's their plan.
We're going to wrap this one up, guys.
Sorry.
But let us know what you think. Is Bitcoin still going to the moon? Who knows? You know? Is the stock market going to keep going up?
Is Bitcoin going to get such a bad rug pull that people are going to be begging for a CBDC to bail them out?
Who knows?
I don't know.
It's not FDIC insured, and we should have known.
Should have known.
All right, guys.
Risk was yours.
Risk was yours for the taking.
Yeah, comment. Let us know what you think, and see you in the next one.